Hi everyone, Happy New Year. We're bringing this quarterly update video to you from just outside New York City this time, which explains the snow you can probably see behind me. So we rounded out a solid 2021 with a rather volatile December quarter, driven by Omicron, of course, and changes in monetary and fiscal policy expectations. Please refer to your fund's investment report for detailed performance information. Now, we continue to strongly believe the quality and upside potential of Montaka's portfolio has never been higher than it is today. This bodes well for Montaka's many patient long-term investors, including those new investors that have recently partnered with us, so welcome, as well as those who are in the process of considering a partnership with Montaka in 2022. Our mission is to achieve superior long-term compounding of our investors' capital alongside our own. And we remain highly confident that we have the right culture, business structure, and of course investment formula to achieve this goal. Montaka's portfolio is meaningfully exposed to several large and reliable long-term transformations with favourable economic characteristics. Today I want to briefly touch on 4 of these and highlight which of Montaka's investee companies are undervalued, high probability long-term winners within these transformations. In global private financial markets, we are in the midst of an extraordinary $6 trillion allocation boost to this asset class in just the 5-year period to 2025. This is being driven by relatively strong private market returns, particularly in technology, against a backdrop of structurally declining public market opportunities, and of course, historically low interest rates. And importantly, the spoils of this massive reallocation to private markets is not uniformly distributed. Instead, the lion's share is being captured by the world's largest asset management platforms, including Montaka's investee companies Blackstone, KKR, and the Carlyle Group. We are in the early stages of a dramatic shift towards real-time 3D digital content and experiences. So that is 3D images or scenes that viewers can not only see, but also interact with. Now today, only around 2% of digital content is real-time 3D, and this is expected to grow to more than 50% over the next decade. And while already ubiquitous in gaming, of course, there is enormous potential to make static digital environments dynamic for the purposes of safety, education, e-commerce, advertising, entertainment, healthcare, and just about every industry we can think of. And it turns out the platforms on which real-time 3D content is created are global duopolists. So one is called Unreal, and that's owned by the private company Epic Games, which itself is 40% owned by Tencent. And the other is called Unity Software. Montaka has investments in both of these platforms, directly in Unity and indirectly in Unreal via Tencent. Montaka also has a significant investment in a high probability winner in the distribution of these new real-time 3D experiences in the future. And that is, of course, our investment in Meta platforms. So formerly known as Facebook, Meta is obviously the world's largest social network, but investors in the stock today also receive an important growth option for free on our analysis in world-leading virtual reality and augmented reality technology. In our quarterly letter and also in this month's Montaka Monocle, we share a detailed case study on Meta platforms, which we would encourage you to review. We are also in the very early stages of an explosion in creator marketplaces. So the rapid growth in popularity of podcasts and Substack newsletters foreshadows what is likely on the horizon. Creators of all stripes will increasingly be enabled to easily identify, digitally engage, and ultimately monetize their fans in a wide variety of ways, leveraging the power of the world's leading digital platforms. So Meta's Instagram and Facebook properties are well down the path of making multi-billion-dollar investments in the tools needed by creators to spark and grow a new global creator economy. Alphabet's YouTube is doing the same, as is Tencent over in China. And even Spotify, another Montaka investee company, has substantial earnings power upside, in our view, from the rollout of new digital engagement and monetization tools for podcast creators and music artists. And underpinning all these transformations are distributed computing platforms. So these are the computing backbones of the global economy upon which all software applications rely. So from public clouds to private clouds to edge devices and all of the platform services to go with them. So networking, security, developer libraries, artificial intelligence or AI, to highlight just a few. Now, AI will emerge as being particularly important for investors to understand in our view. So as software development is being increasingly democratized, we are currently in a 4-year period in which 500 million new software applications are being developed. And that's equivalent to the total number of applications developed in the last 40 years. And this will only continue as multiple applications are being developed in every industry, for every device. And importantly, these applications are increasingly relying on AI models. And what is critical to understand about AI models is that they drastically increase the compute intensity of the application. And this points to an impending explosion in demand for compute, or distributed computing to be more specific. And the long-term winners in distributed computing are known today with a very high probability in our view. They include Amazon's AWS, Microsoft's Azure, and Alphabet's Google Cloud Platform. Over in China, they include Alibaba and Tencent. Now, we are often asked about our top-down views on the macroeconomy and their implications for markets. But investing in undervalued winners in long-term transformations means that short and medium-term macro cycles are far less important to the wealth accumulation of Montaka's investors. But long-term structural dynamics are important to understand, and they do inform portfolio positioning on the margin. We do not make explicit macro forecasts, but we do employ a Bayesian probabilistic framework to estimate the approximate shapes of the probability distributions of the range of possible future outcomes for important long-term trends. So what do I mean by that? Well, consider long-term inflationary forces and the resulting interest rate regime, for example. We believe the weight of probability is still skewed towards long-term disinflation and historically low interest rates, driven by structural forces. And these include aging populations, deflationary new technologies, and very high collective indebtedness. Now, of course, we understand that inflation and interest rates will move around over the short term, as we're seeing now, but it takes a lot to reverse these multi-decade structural disinflationary trends. And it follows, therefore, that the weight of probability skews towards a favourable outlook for equities long term. Now, this is a view which is growing increasingly non-consensus. During the December quarter, there were very few changes to Montaka's portfolio. We exited SAP following its share price recovery. We continue to believe it's a high-quality business with further upside, but its upside potential, frankly, pales in comparison to the rest of Montaka's portfolio. Geographically, little has changed. We remain balanced across developed global markets, dominated, of course, by the US, EU, UK, and Australia. We continue to participate in emerging market exposure selectively, though to a far lesser extent, given the increased inherent risks of investing in these regions. We take this opportunity to thank you again for your ongoing trust and partnership with Montaka. All of us here at Montaka take seriously the extraordinary privilege of preserving and growing your wealth right alongside our own wealth. We remain committed to executing our processes with discipline to generate the best possible long-term experience for Montaka's investors. And to each of our team members, thank you for an outstanding 2021. We've already hit the ground running in 2022, and we couldn't be more excited for what lies ahead.